Morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, August 27th. Last day of the week, last week of the summer. Can't wait to get back to normal business trading, volume increasing, and some volatility because it's actually quite boring. The last, actually, this whole summer has really been virtually almost a non-event. But if you can see here, we did have a little bit of volatility the last few days last week, and partly because of Ben Bernanke speaking about how when the FOMC minutes came out about Ben stating again that he could see further stimulus and further QE3, and then a non-voting member from the Fed, I think it was Lockhart, I'm not too sure, actually downplayed, stating that there's no need for QE3 or further QE3 for that matter. And then Bernanke sent out a letter yesterday. So this is just all hush-posh, and this is all based on elections, what's going on in elections. And you make a statement. Mitt Romney said if he was to get elected, Bernanke would not have his job. So, what could that be? That maybe Ben swaving to try to help Obama keep his job, so he could keep Bernanke's job. So it's really just hearsay. But believe it or not, if you could see, and I stated, every time the market tries to roll over, someone talks up the market, whether it be the ECB, Draghi a few weeks back, or Ben Bernanke itself. So this is a dangerous market when you have no volume and nobody out here. Tier 1, Tier 2 traders are gone. You have the help basically watching positions, and that's what you have to use caution. And again, you're trading a little bit, you have some money in the bank, move off to the side, call it a day, just kind of watch the price action, wait for the best setups, because really that's what's going to really pay you for August, because it is bad out there. The volume is really non-existent, and what I've been doing is, lackluster, hey, no problem. I'm going to step back and I'm just going to wait for the perfect setups to actually look to get into and manage the trades properly. We were talking about the China trade, and what I wanted to mention is that this China trade is going to pan out really well. I could see it happening already. We do trade Forex, and as you noticed that China now is looking at a hard landing versus a soft landing. And again, every nation government's talking their economy up, saying, "Oh, we're looking for a soft landing." Doesn't look like to be so in China. And if that happens, basic material stocks and actually any part of the Aussie is actually Australian dollar for that matter is going to lose its luster, and you got to be careful with that. We had one of the RBA, Royal Bank of Australia bank governors saying that the resource boom is over, and then someone else talked that back up. So you got to really wonder again, is playing a game. These members are all playing a game to try to talk up their markets and the economy. So again, it doesn't matter. The numbers are the numbers, and they're going to hold true. So that's something that we're going to be looking forward to come early September, to probably look to position ourselves for a trade on the downside to some of these resource stocks, commodity stocks, and miners. All right. So what do we have? We have Bernanke going to give a nice big speech at Jackson Hole, Wyoming. I think that's going to be the last Hail Mary for the Obama administration before the election, and I think he's going to really talk this market up. That's what again, guys, nothing actionable, but just my opinion. We do have a couple of ECB policymakers meeting next week, September 5th and 6th. And then we have the FOMC on the 12th and the 13th of September. Now, we do have a little bit, further out here. It's a couple weeks out. But as you know, this week and next week coming back, I think it's going to be a little bit slow. So just want to gear up to what happens, going forward. So let's get it right into the charts. Again, very, very quiet. But you can see how the markets tend to consolidate sideways, gap up, sideways, gap up, sideways, gap up, and then, of course, roll right back down again. So we're back where we started from 2 weeks ago. And we really haven't really done too much of anything here. So this is something to keep an eye on. I think the market has topped. I think the 7-week rally is over. Is there a little bit more upside? There can be. 1422 was hit, and they rolled them right back in here. If you can see right up in here, and then they rolled them back. So I think the market's tired, needs a little bit of rest. And even if this is a new bull market, it does need some rest. And you can see by these indicators, which I'm going to go over now. Let's take a look at the bullish percent S&P. Tired. The market's actually been from June 4th, actually, or June 11th, excuse me, all the way up here. And now the market's starting to hint that looks like we're starting to roll over. Markets are not energized, Bunny, and it can't just go up and up and up without some sort of a decent pullback. Even if it was a 2% pullback, it'd be healthy. In this case, there's nothing going on, and where there's nothing going on in light volume, the markets tend to just gravitate to the upside. Okay, S&P stocks above the 200-day moving average, where there's a little consolidation. We broke out of it, and again, up in this area here is still at lofty levels. So I like to see this market start to roll back in again, and again, healthy for the markets. Stocks above the 50-day moving average on the S&P 500. We're right back up to here from last March, and as you can see here, really needs to kind of come back up. We're at 73% above the 50-day moving average. That's a lot. Now we still have market divergence, but some of the stocks that we had, some of the market divergence actually played catch up, and that was one of the Russells and copper starting to play a little bit of catch up. And I wanted just to show you guys here, copper versus the S&P ratio chart starting to play a little bit of catch up. Still has a lot of work to do though. 200-day moving average at 357, and we have this double top area here, and then we have this little trend line of resistance above in this area here. But we did have this symmetrical triangle that we popped out. So constructive, no question about it. But we like to see this breakout, back test, and then move forward. Then I think we got a shot for that 1460. But if you noticed, a lot of stocks aren't moving. They're only news-driven, and some of the indexes that are the only ones that are moving right now. And what really scares me is a lot of is transports haven't reacted to this little pop the last couple of days. Take a look at the VIX, and the VIX has actually been up the last couple of days. Small down small on Friday, but even with the market up, you want to really take note that the VIX hasn't really been going down. And as you can see here, that double bottom, and we broke back down, and now we're back up into that 20 period here in the VIX daily chart, 20-day moving average, on the daily chart. So needs still a little bit of work, carving out a bottom here, it looks like. So I really use caution. Complacency, big time. Markets are not afraid. And as you can see here, bullish falling wedge in this put-call ratio, and then we roll back down again to the 85 percentile. So we want to really pay attention to what happens if we break back up here and we start to really move up. You'll see this S&P line chart here start to roll back over again. And I do think it's just a matter of time. It may not happen this week or next week. It might happen in the next couple of weeks. But September and October are notorious for pullbacks, as well as August. It didn't happen. And as you can see, we don't want to just gauge on. We want to trigger. We want to make sure that that whatever is telling us back history, we need a trigger, and that wasn't the case at in this August anyway. Okay, so now we have this rising wedge. Okay, we have this rising wedge formation. Pop back above it, hit the 14142, which will be the 1422 in the S&P cash. Now we've rolled back down, back tested it, and held the 200-day moving average, and just kind of exploded to the upside on Friday. Better volume, no question about it, but look at our indicators starting to roll over here. Momentum is waning. So we want to use caution here moving forward. Take a look at the IWMs. And again, same thing with the IWMs. Pop back up here. Played catch up. If you remember, we were sideways above this trend line here, and lower volume. So we did have volume a little bit better, but look at it. It really isn't anything to take home about here. So look at this. Stochastics rolling over. MACD starting to hint of a roll. The histograms are starting to make lower highs here. So this is something that now it can roll back down, and then, of course, bull flag here like it's doing, and then pop up again and give this an ultimate test. So that's definitely possible, but we want to just keep an eye on it. One thing is definitely concerning to me is the transportation sector, and it always has been. And as much as the Russell has, which gauges a great risk, but the transportation sector really has been doing really a lot of nothing. So it's just odd that S&P and the Dow continues to make new highs, where we haven't made new highs here in the Russell and in the IYT. So, again, another factor to take note of. And last week I mentioned I'll show you this Q's weekly chart. We closed with a doji. Now, that's an indecision candle, right? That does not mean we look to sell, right? Now, we did have a nice weekly close. Look at the volume, nice confirming. MACD histograms up, back above zero line. And we're still not really overbought. We're getting overbought in our stochastic. So do we have a little bit of room to run? Absolutely. Usually on a weekly chart, we see a double top. We love to sell that double top. However, we really need confirmation to close below 67.45 on a weekly basis, since this is a weekly chart. So we have another week to go to really look to sell this thing if you really want confirmation on this doji, okay? Now, daily chart, you can see here. Daily chart different, right? So 67 right around here. If you want to look to play that for that 20-day moving average for a fade back in this area, you can do so. Remember, Q's highly weighted in Apple. So Apple really takes precedent on what happens with the Qs. So just keep that in mind, okay? This week, guys, going to be really, really quiet. Monday, Tuesday probably be your best two trading days, and then it'll really die Wednesday, Thursday, and Friday. However, I am excited about next week, not even next week, but the week after, because everybody comes back on Tuesday. Monday, we're closed for the Labor Day holiday, and then they take that extra week, that extended week. But I do think that that there's a lot of volatility setting up for the coming months for the last quarter, and I'm really excited to get back to actively trading again. Okay, guys, have a great day. Of course, I'll have full report the rest of the week. Hope you had a great trading week last week, and we'll talk to you tomorrow. Take care.